Hello, this is Mike. Here are some ideas that I put together with another friend named Mike on the U.S. budget and taxation system. I hope you find this entertaining. So here we go. All right. So, U.S. federal government budget, what is wrong and how to fix it? Called the Mambo Plan for the Mike and Mike budget overhaul. My appreciation to my friend Mike Ulysses for helping me put all these ideas together. Current state of the budget in a snapshot. We have a whole bunch of programs. We have 4 programs that are the lion's share of all the budget. We have a lot of social needs in the country. We have a lot of demand for more and more spending to take care of all those social needs. On the revenue side, we have a whole collection of different taxes, all of which everyone resists paying. So we have a lot of need to spend a lot of money and a lot of resistance to spending any money. And because of that, we have a $966 billion annual deficit. So how do we take care of social needs when we can't pay for them? So the conundrum basically is you look at the budget deficit and you say the government is spending too much money helping people. Then you look at wealth inequality and you say the government is spending too little money helping people. So what do? So this is an attempt to do it better. So basically, the problem is on the revenue. Let's look at the revenue side first. We got too many taxes and it's way complex. Normal person can't possibly understand how the system works, and our personal income taxes are very complicated. So many of us, if not most of us, pay somebody to do them for us. And then the corporate earning taxes are even worse. We have a whole collection of different taxes that have all been band-aided together. Every time we want new spending, we create a new tax. And all this complexity results in a great deal of money that is not reported for taxation. And a lot of our deficit is simply because we're not taxing all the money that we should be. And we have this situation of this almost $1 trillion deficit. So what we propose on the revenue side is 3 sources of federal revenue. First is a business tax, which is not an earnings tax like it is now, not profit and loss, but a simple percentage of total receipts. It's modeled on the Washington State business and occupation tax. You take in all the receipts you get from all your customers, you multiply by 15% and you send it into the IRS. You don't need accountants to figure that out. Then we have a wage tax where your wages, not capital gains, are simply withheld from your paycheck, sent into the federal government. There's no capital gains involved. You don't have to fill out a tax return at all. You don't have to do anything to pay that tax. And lastly, we add in a wealth tax where the top 10% will pay a sliding scale of their total net worth. Now, together, these 3 taxes will add up with the projected numbers that we have right now to $5 trillion revenue per year. This compares to $3.86 trillion in the 2021 federal budget. And basically, without even cutting any money, we would balance the budget with this tax system. What I think is the main driver behind this is it vastly simplifies the system. It eliminates this whole menagerie of taxes that we've got. You don't have all the accountants. You don't have all the government people monitoring all this. You don't have giant systems to monitor all these taxes. There's no tax classification. You don't have to worry about if you're single or married, filing jointly or whatever. There's no deductions. There's no exemptions. You don't have all these adjustments to your income that you were making. And because the taxes are so much simpler, almost all of the IRS enforcement can come down to this wealth tax where you're only targeting 10% of the people. So it'll be much easier to target the focus and enforce that the taxes that should be paid are paid. And maybe the nicest thing is if you're in the bottom 90% where you don't pay this wealth tax, you don't have to do anything to pay your taxes each year. The wage tax is just taken out of your paycheck And the business tax is just part of the price you pay for all the goods and services that you buy, and you don't do anything to do your taxes. So moving on to the wage tax, okay? The orange line is how current income taxes go, assuming that you are just taking the standard deduction. So there's no tax below $24,800 in income. Then the marginal tax rates range from 10% up to 37% when you're above $600,000. But at higher incomes, then you start to see the higher earners typically implement capital gains tax. And there's this, as we said before, multitude of deductions and exemptions and all these other kinds of adjustments that are made. So as this orange line continues out, the wealthier people are not actually paying this high because they're paying capital gains. They have much larger deductions. Their tax rates are actually much lower. So in the wage tax, once again, there's no tax below 24,800. So down here at the bottom, nobody's paying any tax. Then starting at 24,800, with up to 68,400, you'll pay a 10% marginal tax rate, then 15% up to 100,000, and then 20% above 100,000. So you get the blue line that generates out here, and it will flatline out at 20% no matter how high you get with your income. And bear in mind that this chart only goes out to $500,000 per year income. And these numbers were chosen because at these middle class income tax rates, they are very, very close to the standard current federal tax. We're basically keeping the same income tax level for the middle class and lower class people who are paying predominantly taxes on wages anyway. It eliminates all the personal classifications. You're not labeled as single and marrying, filing jointly, head of household, anything like that. You don't have this myriad of exemptions and deductions and all those kinds of things, although I would be open to looking at some specific ones if there are very good reasons and people who would be helped substantially. As mentioned before, it roughly matches middle class tax rates, and you don't have to file a tax return. It's processed just like your Social Security taxes now, where it's just taken out of your paycheck, goes to the government, and you never see it. And calculated out over the entire population by my best estimates, this would generate $930 billion in tax revenue. And go back to, it is salary and wages. It does not apply to capital gains. So this does not apply to selling stock. There's no income recorded for this. If you sell stock or buy stock or things appreciate or depreciate or anything like that, this is just salary and wages. So moving on to the business tax, you have a business. You have a whole bunch of customers that come in and they give money to your business. You take all the money that comes in from all those customers, multiply by 15% to send that to the federal government. That's all there is to it. You don't have to calculate all your earnings. You don't have to calculate your losses. You don't have to calculate appreciation and depreciation. You don't have to hire an army of accountants to figure out all this stuff for you. It's very simple. Also, your business tax is not paying the Social Security contribution for your employees that you have to make now. So you can knock down that amount from that 15%. And the tax, all the customers are contributing to that tax, but it's completely invisible to them. It's just part of the price of what they're paying you for the goods and services. And this would generate $1.6 trillion annual revenue. Now, I got two slides on the wealth tax. The first one is showing in rough terms, we have what we call a progressive income tax. That the blue line represents your income tax as a percentage of your income. So if you're at $68,000, which is the 50th percentile for income, so that's the median income level is $68,000. Assuming again that you're just taking the standard deduction, you would pay about 7% of your income as tax. And so as you increase in income, assuming you don't change how you're doing your deductions, um, the percentage that you're paying as you go up through the tax brackets does get higher and higher. And once you're up above about $1 million, you're paying in between 20 and 25% of your income as tax. Now, the people up here at this level, much of their income is coming from capital gains, which are taxed lower. They can also take much larger deductions. So they're not really paying taxes that are quite this high. Um, but you get the idea. As your income increases, your tax percentage increases. So that's why we label this as a progressive income tax. But if you put it in terms of the percentage of your wealth, look what happens. The guy at making $68,000, if he's also on the 50th percentile for wealth, he's got total wealth of $121,000, and he pays $4,800 in taxes. So he's paying 4% of his total wealth in taxes. And what happens is, as the wealth, because it increases so rapidly as you go up in percentile levels, as you go to higher percentile wealth levels, you actually pay a smaller percentage of your total wealth in taxes. So if you express your income tax as a percentage of your total net worth, the wealthier people are actually paying a lower percentage of their net worth than the people in the middle and the lower classes. And so this creates a rationale that maybe we really do need to have a wealth tax and not just an income tax. So how the tax will work. When you start at 90%, so no one below the 90th percentile in wealth pays any wealth tax. So you start paying a 2% marginal tax rate at 90%. So the guy right on the 90th percent line, he pays zero. He doesn't pay anything. But as you increase from there, you have marginal tax rates that start at 2% at the 90th percentile, and they range all the way up. When you get to the group that's over $100 billion, it's a 10% rate. But if you look at the effective tax rates, you can see as you scale up through the percentiles, a person who has a total wealth of $2 million will pay $19,000 in the wealth tax and 0.9% of his wealth. You see, you get all the way up to $6 million in income before you start to pay 2%. So if you look at, say, where the 97.5 percentile, where your net worth is $5.5 million, you pay $107,000. That's 1.9% of your net worth. And if you go all the way up to the guy who has a net worth of $100 million, he pays $7.4 million. And yes, that's a substantial chunk of money, but that's only 7.4% of his wealth. And he's probably going to make that back next year. So these tax rates do stack heavily into the top 2%, and especially up into the top tiny fractions of the people who have hundreds of millions and billions of dollars, and it greatly increases their share of support of the U.S. Government system doing it this way. And just as a fun fact, Jeff Bezos, who's the top dog, he has $197 billion in net worth, and he would pay $18.7 billion out of this. But I think he's going to make more money next year, and I'm not really worried that we're going to make Jeff Bezos go broke, even with the tax rate that high. But I think if you look at these numbers, these are not horribly unreasonable rates for what you're paying in tax versus the wealth that you have. So moving on to federal expenditures, and I won't drag you through the details of this chart. All I'm trying to do is show here, you've got four big hitters. You've got Social Security, you've got Medicare, you've got Medicaid, and then you've got defense, and then all in the red, shades of red here, the defense-related spending. Those items together make up 80% of the total spending. This other mandatory programs looks like a big block, but it's a whole slew of programs: federal retirement programs, student loans, Head Start, child nutrition, child care, food stamps, all kinds of programs. Each one is a very small program. The point here is that you've got to go after, if you're at all serious about constraining spending, you've got to go after the four big programs. Everything else is chump change in comparison. So just for fun, I put this on an individual level. You have 200 million American adults. Each one of them, on average, pays $5,700 for Social Security payments, $4,600 for defense-related expenditures, $3,600 for Medicare, and $2,200 for Medicaid, and $1,900 just going to the interest on the debt. So you got $18,000 just to fund these four programs plus the interest on the debt. And so I'm just making my point here that you hear people all the time, we shouldn't spend so much on student loans. We shouldn't spend so much on education. We shouldn't spend so much on NASA. We shouldn't spend so much on Pell Grants. You know, go through the, we shouldn't spend so much on environmental issues. Those are all chump change in comparison to what's going on up here. So what we did with this program was we said, what can we do about these four programs to take put an actual dent in the spending that we have? So the first step to address Social Security is what we're calling the Birthright Fund, and it's actually taken from a hedge fund management CEO named Bill Ackman, but we have greatly expanded what he was doing to make it a lot more comprehensive. So what you do is each time a baby is born, there's two financial funds created. $80,000 goes into one fund that will be accessed, can be accessed when the child turns 18 years old. If you grow at 7% a year, that 80,000 would then be 270,000, and that becomes the fund that will pay for college, will get you started in your adult life, it will pay for trade school, do whatever you need to, it will put you on a sound financial footing to start your adult life. The second fund is for $40,000, and that's the retirement fund. So that grows the entire time up until you're 60 or 65. We can debate what that is. If it grows at 7.7% a year until you're 60, it'll be $2.3 million. That becomes your retirement fund that you can then access. And even if we don't achieve 7% a year, if we only achieve 5%, we still have 192,000 when you're 18 and 747,000 when you're 60. So it's still a solid fund that will work. Now here's the kicker for this whole thing, is that you say, oh, what's it going to cost? What's it going to cost? I got 4 million births a year, and I'm going to give each baby $120,000. That's a $500 billion outlay per year. But your current Social Security spending is $1.15 trillion a year. This program costs $500 billion. You have a net savings of $650 billion per year, and it covers every citizen. Every baby born gets this. It's not tied to employment history like Social Security, where if in your life, for whatever reason, you didn't earn substantial money, you don't get Social Security. This covers everybody. I think Bill Ackman had a great idea. I think if we expand it, it takes care of a driving social need. There will be a transition period where we have to spend some money to transition over from Social Security to this, but I think this would be a much more efficient way to fund these kinds of things than Social Security is. On medical costs, I'm not going to debate specific plans, but there's 30 other advanced nations whose medical costs on average are half of ours. Those 30 countries have all kinds of different plans. They're not all the same. Some are like Medicare for all, some are not, but all of them are better. It is ridiculous that we actually don't have very effective health care and we're spending twice as much as everybody else. If we have to, let's go out to those other countries, hire some of their experts to come in and design a system for us and our society and our economy. But there is no reason this number cannot come down substantially. If this number comes down 30%, not even 50%, we save $350 billion a year. Surely we can do this. We just need the will to go do it. And similarly with defense related costs, do something about defense. In this chart, they're showing defense spending as $32 billion. It's more than half of what the next 9 nations are doing. And together, these 10 nations are 3/4 of the entire globe's defense costs. So we're far and away outspending anybody else, and our total spending is $924 billion for all the defense-related spending. Surely we can knock out $200 billion somehow. So if we put the entire plan together, and our revenue changes, the wage tax will generate about $0.93 trillion, $930 billion in revenue. Business tax generates 1.6 trillion. The wealth tax generates 2.5 trillion. This is a net revenue increase from our current budget of $1.14 trillion a year. And it is this vastly simplified system. You're not going to need all the accountants. You're not going to need all the effort. No, but people aren't going to have the headache of filling out their tax returns every year. And all of these different kinds of taxes go away. All the people in the government and in the private world who have to take care of these taxes and calculate them and manage these systems, all of that goes away. This all becomes a greatly streamlined system, which I think is going to take all kinds of cost out of all the government operations and private industry as well. On the expenditure side, the birthright fund saves $650 billion a year and covers people better than Social Security does. Medicare and Medicaid, if we cut costs like every other country can do it, we save at least $350 billion on defense. I think there's $200 billion surely that we could cut out of the system. That makes an expenditure decrease of $1.2 trillion a year. So if we start with a budget where we have a deficit of $966 billion, but we increase our revenue by 1.14 trillion and we decrease our expenditures by 1.2 trillion, we get, if we don't cut spending, we get any other spending, we get a surplus of $1.374 trillion. So now we can look at this and say, okay, we do have other social needs. We have COVID, we have wealth inequality, we have infrastructure we have to take care of. We have some spending needs we have to address, but where else can we cut as well? But now with this system, you essentially you've got a budget that has a surplus to start with. Now we can have these talks about where to spend and where to talk, and we can have a rational discussion that we almost can't have right now. So last slide, there are certainly questions yet to be resolved. What loopholes exist? One thing I'm afraid of, I'm not a trained economist or anything. One thing I'm afraid of is that there's some place that people could put their money where my 3 revenue sources don't capture all the taxes. So we need someone to go through and make sure that we haven't left gaping loopholes where people can avoid taxes. And there are ways where people do that now. So we need to make sure that that doesn't happen. Are there some exemptions and deductions that we should retain? People like the home mortgage deduction. My concern about that is, why are we giving them favoritism by letting you deduct home mortgage, but we don't let you deduct rent? Maybe we deduct both. Should a person with 5 children get some kind of a tax break over other people? So those are discussions we can have. Um, I don't think it will substantially change what the outcome of this whole system is. Have I missed anything in terms of any unforeseen negative impacts that could possibly occur? One good point that was made um, was the birthright fund. Um, how do we assure responsible use of the fund? If we take someone when they're 18 years old, or even when they're 60 years old, and we just drop hundreds of thousands of dollars on them and say, here you are, go spend the money, a lot of the people are not going to spend it responsibly. And I have to accept that we are going to need some controls on that. Um, Perhaps it can only come out at 10% per year, or there's some other kind of controls that we put in. But that's another thing that we would have to think of. And then clearly, I put these numbers together from publicly available sources on the internet. We would need independent authoritative verification, and correction on the numbers to get numbers that are valid all the way across. And I have to expect that there are probably some other things that I'm missing. So if anyone wants to interact with me and try to help me make this better, I would be more than happy to do that. In the full PowerPoint slide, I have a bunch of backup slides that provide data and examples and explanations of how we got the numbers and things like that, or those can be discussed. But anyways, thank you very much. That is the end of the presentation. Thank you, everyone. Have a good day.